All right, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the S&P held the 71.5 support, and as mentioned in yesterday's recap, holding above 71.5 tells us that buyers are in firm control, and we ended up getting a push to a new all-time high in the overnight session. At this point, the market is very balanced here at the top of the recent range, and this tells us that buyers are maintaining control and holding on to the recent gains. Now, the next big economic catalyst is the non-farm payroll, the employment report due tomorrow morning. And for that reason, I'm not expecting a big move in either direction. Now, that doesn't mean that we can't break out and extend the range to the upside, but I think at this point, the upside is probably going to be limited, and you certainly want to be careful buying too high in this market because, a 5 to 10 point or 15 point pullback would be absolutely no big deal. And it could very well happen that, today we extend the range to the upside, but then actually fail at initial resistance or maybe a little bit above it, and then come all the way back down to the recent balance. So basically all the way back down to the 71.5 HVN that was established over the last 2 or 3 sessions. So at this point, basically, the bias is still bullish from here, and we can still get a upside extension. The overnight session is very balanced, so if we get a breakout above the overnight high, then we could get some continuation for at least 4 to 6 points, which would take us into the top of the initial resistance zone. But then, after that, I think that the upside is going to be very limited, and at that point the risk is going to be more on the buy side than the sell side. Typically heading into a big economic report like non-farm, the market usually stays relatively balanced and kind of rotates around the recent area of acceptance, which in this case is 71.5. So, if we fail to take out the overnight high, then we can quite easily get a pullback to 71.5. In the event that we break and hold below the pre-market support, we can go down to 63.5 to 65.5, look for buyers at that zone, and then bounce back up towards the 71.5 HVN. So, in the event that the internals are kind of weak or mediocre, then we might just get a downside rotation and just continue to balance within the recent range. If the internals are holding up quite well and trending higher, and the NYC tick is holding up quite well and showing us that the distribution is more skewed to the upside, then we can still get a breakout and then start to balance. But at this point, the higher the market goes in the short term, heading into tomorrow's employment number, the risk is actually more to buyers rather than sellers because we are trading at elevated prices. And again, getting a 5, 10, 15 point pullback would not be a big deal at all, on the larger time frames. So as far as the strategy for today goes, if everything is looking extremely strong off the open and you want to trade, a breakout to the upside, that's a potential setup. It's not the most conservative setup, but if everything is strong across the board, then that might be the only setup that we get early in the morning. The next idea is that if we get a pullback down towards the pre-market support or initial support, those can offer better trade location for longs. The pre-market support is an area, basically it's the bottom of the recent balance. It's the HVN, it's the gap, so there's some confluence there, but it's still aggressive location because that means that market has to stop there and then go back up to the highs. So if we fail to take out the overnight high or we fail at pre-market resistance, then we actually even have to be cautious at pre-market support because we might just balance around pre-market support, which means that we would extend lower and then come back up to pre-market support. So in that case, there is potential for a short setup. It's not in alignment with the larger time frames. So I think the conservative trades are still going to be, on the buy side, or if ES overextends to the upside, let's say heading into like 83 or something, then there could be a potential short over there because from there ES can quite easily pull back to the 75, 76 area, or basically to the overnight breakout area quite easily. So at that point, you'd have good reward to risk even on the short side. So we can consider a short setup only in really two instances. One is when ES gets overextended, and the other is when ES puts in a clear failure at pre-market resistance on weak internals and weak NYC tick, and then we can still consider the short side for a move down to 71.5 and potentially lower. So those are really the main trade ideas on the day. Overall, the volume is still relatively light, expecting it to be still more of a balanced type market, a lower reward potential market, and for those reasons, it's better to be selective and really only put on the trade where you have 3-to-1 reward to risk and pretty high odds of at least getting some rotational activity at the zone. So right now, that's how the market is shaping up. Again, the main catalyst is tomorrow morning, so not expecting a huge move on the day time frame today. So just going to be cautious and conservative today, and then hopefully, tomorrow we get some better directional movement and volatility expansion. So those are our main ideas. Let's see how well we react at pre-market resistance and pre-market support, and that'll pretty much help us, set the tone for the day.